Hi, it's Steve and Joe from Freshagenda. And Steve, no GDT this week, but we're here to talk about our latest Global Dairy Directions quarterly outlook, and also something modern, and of course, Chart of the Week.
Yeah. Okay. Sure, that's got everyone intrigued. Here's a good page out of our usual quarterly.
They're all good pages.
All of them are good pages, every one of them. This is our hot items pages. So what's hot? And just for those who can't count, we've got numbers down the side to help out there. But we do this each time. There's, I guess, the things that are the biggest burning issues in the world market impacting the balance of trade. We also look at a number of other watch points, but these are the key, I suppose, the core dairy issues that we're looking at. And so let's just summarise. I guess there's the COVID impacts are in 1 and 2.
Yes.
That are most critical. We've got a number that impact milk production. And then let's talk a bit about affordability and weather. I suppose that's 4 views, because you did limit me to 4 pictures after this. So
yeah.
So
this is probably where a lot of the complexity is coming from in this outlook, isn't it? Because vaccinations are running out fairly quickly in some places. Variants are rising quickly in others. Developing nations still behind the 8 ball. Here in Australia, we're not vaccinating at all. No hurry, apparently. So where do we see this going, Steve?
So the way we look, we centre it on the major changes that are going to occur, and it's really the shape of demand. So in the US and EU, where most dairy products are consumed, most of the milk solids are consumed in cheese markets. In terms of what sets commodity values, both had a very different COVID experience. They've had very different COVID experiences, but in the US, we'll see total cheese demand pick up as we go further, and the mix of that demand shift from cheddar back towards mozzarella and the typical food service types.
That's really reflecting that their immunisation programs are going quite well, speeding up in fact. And so the reopening of food service is going to shift that demand away from cheddar in retail towards that mozzarella food service demand.
And it will happen fairly soon. And we're already starting to see some of the effects of that in weekly insights out of that market. Over in Europe, less control over COVID has got away from them, and a slower vaccine rollout will delay that. So we've seen more restrictions piled on, and we're going to see retail dominate demand. Which has helped dairy.
Yes, it's been quite positive for dairy.
It's probably made that. So that's I guess the easiest part of it. When you look around the rest of the world, we've got a very complex layering of effects, and so we explore those. Milk production is expected to gradually decline in total as we go through the year, which will certainly help. And that's our overall tone is the markets are firm, while we're seeing demand come back on the buy side with what we just talked about. This will help out because the growth in the US, while strong at the moment, will start to taper. Europe is having a pretty sluggish start to spring.
Sure.
And we're tailing down in New Zealand, and next season obviously a lottery. So that's our milk outlook.
So the weather conditions out there are quite dynamic, aren't they?
Which brings us to. So they are very dynamic. We've got a situation in Europe, and really the recovery in European milk depends very much on what's going to happen in spring, which is already late.
Yes.
And going to be shorter, and there's already a reduction in herd numbers there, which is limited production, so that's probably going to be a constraining factor. The US had black and red mass on the left-hand side indicating drought is only getting bigger. So that threatens crops, and we talked about the lottery in New Zealand, which goes week to week almost.
Yeah. So here it's the La Nina is breaking down. The flip side of that is dry conditions in some of those other regions, particularly South America. We haven't got a map on here, but that's going to shift through the year, isn't it? As those systems reverse.
Yeah, they will.
It's not COVID.
That you know of. The other thing we've got on the radar is the demand side. We've seen prices rise quickly, inspired by GDT, which is a unique price discovery mechanism, pulling whole milk powder out of the reach of most of these developing Asian markets. And if you ran this across other regions, Mengniu, etc., it looks similar. So whole milk powder is at the top end of experience, so we'd say affordability is being challenged, even though buying is a little bit below trend in that region.
Yeah.
Skim milk powder looks in a lot better shape, so we'd say demand for skim looks stronger.
So there's a bit more headroom for skim than whole milk powder at the moment. But again, as you said before, mixed bag in terms of how some of those countries are handling COVID and the economic recovery and their recovery in tourism and that kind of thing. So it really is fairly dynamic in that region.
That's right. Look, away from our outlook,
this is something modern.
This is something particularly interesting. So what's going on in China is very important here, and we've seen results come out of the Mengniu put results out this week, which showed the struggle that those companies have been through in this year. Here's their major milk supplier, Modern Dairy. Fascinating from my perspective. So Modern delivers almost 1.5 billion litres of milk as a single company. Obviously, a number of corporate farms. They paid a milk price in 2020 which was above the industry average. As we've been hearing, the larger companies pay a lot more. They have higher costs, and we've essentially what that translates to. Our American friends would look at this and go, $27 a hundredweight for milk is pretty astonishing milk value. What also is apparent here is the widening cash margin over feed costs. So their feed costs are actually falling. Now, a lot of this doesn't capture what's happened this year in those costs escalating. So this will look a bit different next year. And obviously the milk price has also shot up quite a bit. But the operating costs of this business are down. The big thing for me is the free kick they're getting with the way in which these farms are set up. So the capital cost of the operation in full is about $16,000 US per head. That's per head of milking cow. And you'd say, so what? But when you strip out the value of the cows, it means the land, the infrastructure, the equipment cost this company on their books $3,500 US. It's called a community asset. So they're putting in, I'd encourage people to go and look for this release. It's not hard to find.
It's comprehensive, that's for sure.
They give away a lot.
They give away a lot of information. And the expansion that they're planning is
articulated.
Yeah, and is understandable given the cash margin they're making. So, I think 80% of their milk goes to Mengniu and then New Hope, but there's probably other customers out there for this increased production that's coming on stream.
There's other companies like this paying high milk prices, from what I understand, in some of the other regions. So
fascinating.
Yeah, it is. Chart of the week, Jo.
Chart of the week. Well, this week, just looking at butter prices in the US, which have had a bit of a rally, but that's really, again, a lot of moving pieces behind that. The trends in milk production, that might be slowing down, and food service opening up. Summer's coming, a bit more cream usage in ice cream and the like. But just putting this in context about where US butter prices are compared to prices in those other regions, they've still got a long way to go on those numbers, haven't they?
They have. We expect to see
those come down.
Those come down. The New Zealand price will probably relax. We look at this in our outlook at the difficulty of holding those prices and what's already happened to developing demand at lower prices. So they'll converge. They'll converge
over time.
But the US rally has been going on strongly, and we expect that to, whether it will continue or not in the short term. But that's a pretty interesting chart.
Another one to watch.
You pick good charts, Jo. All right. Well, that's all from us. Thanks for watching. We'll be back soon.